Let's get to the big story breakdown. Well, Wall Street is higher ahead of the market open on this Friday morning, and this does come on the heels of the latest jobs report. And as 2026 kicks off, the Dow is now up over 2%, holding well above the 49,000 level, while the Nasdaq flat for the year and the S&P 500 up over half a percentage point year to date. Well, joining me on this Friday morning is Peter Tuchman, senior floor trader at Trade Moss. Good morning, Peter.
Good morning,
happy Friday.
Yes, happy Friday.
Well, we are looking at a higher open on the heels of that jobs report. Non-farm payrolls came in lower than expected, and there were downward revisions to the previous month, but the unemployment rate down to 4.4%. So what do you make of the report?
Oh, you know what? It's a little. Look, I like the report. I think I like the information. You know, we've been trading in the blind now for a number of months. You know, and this information is really important. Now you can understand why. At the last Fed meeting, you know, that they did talk. Not at the meeting they cut the numbers, but at the meeting when they told us the minutes. There was a little nuance to that meeting where they said that there was really we came really close to not getting a cut. And that would have obviously been a function of a stronger economy than we anticipated. And these numbers are showing that, reflecting that, right? So this is not, we're going to start to see this information start trickling in. The more we start to see that, the more or less, you know, I mean, I would have thought with the economy a little bit stronger, then that's why we're getting a 95% chance that there is no longer a cut. Right, and so you know what? Look, we're going to start changing. We're going to start pivoting. You know, there are a lot of dynamics going on at the moment. Beginning of July, there's a lot of fresh money coming into the market. July. I'm still in July. You and me, we're still in July. In the beginning of January, there's fresh money coming into the market in the beginning of a year. There's fresh money coming into a market in the beginning of every month. Then you've got the January mindset, which is where January goes, so does the market go for the year, right? We're not there yet. We're only about 7 days into this trading experience. So everybody knows that historically, you know, if you have a positive January, the year tends to be positive historically. And if it's negative, you have a negative one. But you know what? Seasonality has not been really our friend of late. I think the jobs numbers are great. I mean, and when you get unemployment to tick down, right, it'll probably affect the inflation a little bit. You're setting yourself up for a really strong economy, and that's what that information we got out of that last Fed meeting was important.
Yeah, and speaking of the Fed, about 19 days to go until the January rate decision. We're keeping an eye on expectations, and right now, as of this morning, we are looking at the probability of rates staying on hold at 95%, according to CME FedWatch. But next week, we get into earnings season, big banks kicking off with their quarterly reports, and of course, we get inflation figures, so that will also be part of the equation when it comes to monetary policy.
Right.
So what do you expect as we head into the rest of this month?
Okay, so look, obviously the lifeblood of this market is earnings, and earnings are going to be one of the things that either take us higher or lower.
Yeah.
And I can't really come up with a prediction on how that, because, you know, we've had, look, if last year gives us any sense of what's happening, we blew out earnings last year incredibly. We were better than 80% of the S&P beat last year, and they were solid. We know, if we remember, we had extraordinary earnings out of Palantir and NVIDIA, right, at the end of last year. And, you know, that sort of gives us a little sense of what the Mag 7 was doing, tech sector. We do know that we're in the midst of building these data centers, and that's a big boost. Yesterday we had Dan Ives ring the opening bell here. His ETF, which is his favorite 30 stocks in the tech sector, his assets under management have gone to $1 billion in short 7 months. It's one of the largest rises. So there's a lot of enthusiasm in those sectors. You know, look, as we look at this economic data, obviously the inflation number and the unemployment number are going to be the key factors that will affect whether we get interest rates or not. The stronger the economy, the less chance of an interest rate cut. The weaker the economy, the more chances of an interest rate cut, right? And so while we did get 3 cuts last year, we did hear at the end of the year that we almost didn't get that cut. So what we're setting the stage for is an economy that is stronger than we think. That's a good thing. We want that. We know, look, we're here on the stock exchange. We're a little bit insulated from what goes on in middle America, right? The people that we're dealing with here on the floor are people who have more money, and so we want the economy to be strong. That's the life of blood of Buy America. So, and I guess, you know, and the president's goal is to make America great again. Well, you know, if you have a strong economy, then you're going to be able to do that.
And speaking of which, you highlighted some of the key themes that we've been watching during the first full trading week of 2026. So geopolitics, as well as what came out of CES, these are top of mind for us. But as you mentioned, the American economy, what affects everyday Americans, is prices. So what do you expect, especially as we're focusing on oil today, in addition to prices in the nation's capital?
So, look, one thing that we did, you and I went over it on Monday, we did see that the Dow was up 14% for the year. We had the S&P up 16%. We had Nasdaq up 19%. The only thing that was really down last year was Bitcoin and oil. Right now, we do know that when the price of oil goes down, right, it affects inflation, right? It affects the prices that people are paying, and that's a good thing. Right now, we do know that we're in the middle. There's so many moving parts to this story. We could talk about it for hours. We all obviously know that we had an incursion into Venezuela. Venezuela, for those of you who don't know, is one of the top 3 oil producers in the world, right? You've got Iran, Saudi Arabia, I guess Iraq, Venezuela, the United States, Russia, China, right? These are big players, but Venezuela is a huge one. Now, was this incursion a oil play? It was a silver play? Was it a gold play? It was just a power play? I don't really know. But we have not seen it play itself out yet on how we realize that they have $7 to $12 trillion in assets, in oil assets, in oil reserves. That's a huge number. We do know that Venezuela's oil is heavy oil. It's really hard to get out. But we do know that if we take control of their oil, that's going to have, we don't know how the Saudis, how the Russians, how the Chinese are going to respond to that. So look, with inflation a little lower in anticipation of a stronger economy, inflation a little lower, oil prices going down, that will put a little pressure on inflation in a good way, and then you've got a stronger economy. These things are setting up for a really strong economy with lower prices, oil prices that way. If we we probably won't get the cut that we were hopefully going to get in January.
Well, Peter, we know that geopolitics and national security are an area we will continue to monitor. So Thank you so much for joining me.
Absolutely,
and have a good weekend.
My pleasure. Happy Friday. I was going to say happy Monday, but it's Friday. Happy trading.